Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. In this video, I'm going to answer the question, how much money can you make from Forex? And you'll also be able to download a free tool that will help you with this particular question. But we're also going to go a lot deeper into Forex trading, and we're going to look at what it takes to become really successful from Forex trading, because unless you get that right, the money won't flow. If you get that right, the money will flow automatically. And when it starts flowing, it's going to be like a dam wall that is breaking. You will not believe the flow of money. So let's have a look at what you have to do to get this right. Now, every day, and literally every day, I get emails saying, how much money can I make? I want to become rich from Forex. How do I do that? How do I control my risk to avoid margin calls? What account size do I need to trade? How can I increase my Forex trading income? How much money can I make? Lots of questions that are coming through, and if the people asking this question watch this video, that will answer all their questions. So 17 years ago, I retired from the corporate life, and I ran a company of 3,000 employees, and everything was measured by critical success factors or key performance indicators. So in other words, employees were evaluated by their key performance areas. If they got that right, they would be performing to the benefit of the organization. And if they got that wrong, there would be a problem, and we'd have to deal with that problem. The organization was measured by critical success factors, financial ones and others. So these critical success factors create goals for people to strive for and also focus them on what matters most. Now, I'm going to use that approach to look at Forex income and Forex success. What do you need to make a success of Forex? And as you can see on the screen, it's very simple. You need 5 things. And I have created a free downloadable Forex income calculator that takes those 5 factors into account, and you only have to focus on those 5 factors. If you get them right, you will do pretty well in Forex. So let's have a quick look at what those 5 factors are. Firstly, you need money. You can't make money without money in your Forex account. Secondly, you need a success rate. You need to be trading, and you need to know how many losses you are incurring for every 10 trades and how many successes you are having for every 10 or 100 trades. Very important that you know that and manage your success rate accordingly. And we'll look at that in more detail. Then you need to know what your return on risk is. And now what that is, it means when you open a trade, you're risking, let's say, $100 on that particular trade. If the trade is successful, are you going to get $100 back, or are you going to get $200 back, or $300 back? So your return on your risk is a key factor to creating Forex wealth. Then the 4th factor is, what percentage of your account are you risking on every trade? Now, that's an easy one because it's a mechanical thing. You can just decide it, and you don't need to do much more after that. But that's a very important factor, because if it's low, your risk overall in Forex trading is lower. If it's high, your risk will be higher, and the chance of you blowing your account so much higher. Then the number of trades that you actually do. Now, I know so many Forex traders that want to succeed. They want to do this, they do, but none of them trade. I remember this joke about the genie, and the guy was going to the genie. He said, "Oh, genie, I really want to win the lotto this Saturday." And on the Monday morning, he said, "Genie, you let me down. I didn't win the lotto." And the genie just turned down to me, "You need to buy a ticket to win the lotto." Now, so many people are so immersed in Forex trading that they forget to trade. And I'm not exaggerating. People do not trade. They're too scared. They want to get it perfect. There's hundreds of excuses, but they don't trade. So the number of trades is very important to your success. So let's go into these 5 factors in just a little bit more detail. Now, I'm not going to go into money in a lot of detail, but essentially, we get a lot of people saying, I've got an account of $200. How much money can I make? Now, quite honestly, you know, a good return in a year is about 40% on your investment, and 40% on $200 is $80. So are you going to trade for a whole year for $80 and hope to become rich? Please, you know, the money side, I'm not going to go into that in too much detail, but the money you use to trade plays a big role in your success. And you don't have to have a lump sum. You can start with a small sum and every month add $100, add $200 to your account and build your account up that way. So money does play a role. If you've got $100,000 to trade, you can make a lot more money than somebody who's got $1,000 to trade, or so much. That is almost obvious. So let's go to the next factor, which is the success rate. So the success rate is the one that people underestimate. You need trading experience to have a success rate. And when I say trading, you need a track record. You need to know, in my last 100 trades, my success rate has been 63.5%. You need to know exactly what your success rate is. And the only way of finding that out is building up a track record. So you need experience to determine your success rate. And once you've got that, then you can say, all right, now how can I increase my success rate, or how can I manage my success rate? But unless you've got a track record and you know what your success rate is, you can't move much further. Then again, you have to have the ability to trade. Some people just have the ability to trade. They can create a high success rate very easily. They can see the trades. Others are less fortunate and have to work very hard to build a success rate. But it all involves time, and often people aren't comfortable in investing time to develop the experience and ability. Your stop sizes play a role in your success rate. Generally, the bigger your stops, the higher your success rate. So the more successful traders do use bigger stops, strangely enough. Market conditions play a role at your success rate. The market conditions are never stable in the Forex market. The Forex market is always changing phase. It's either trending to another place, or consolidating at that place, or moving up and down in that place. It's never stable. The conditions change all the time, and therefore your performance and your success rate can vary from time to time. And then your trading approach. Are you a scalper? Are you a swing trader? Or do you trade the 5-minute charts? Do you trade the 4-hour charts? That kind of thing. That plays a big role regarding your success rate. In general, I'm generalizing now, the longer your time frame, in other words 4 hours daily, the more successful you're going to be. And when you're trading 5 minutes and that kind of thing, your success rate might not be that high. I generalize. Then your return on risk, and as I've mentioned before, basically it says if you're going to risk $100 on the next trade, what is your average return on that risk? Is it $80? Is it $120? All that now that plays a big role, as you will see when we go into the actual calculations, because you can have a low success rate but a high return on risk and still be profitable, and the other way around, you can have a low return on risk and a high success rate and still be profitable. So these two factors play together to make a successful trader. And then obviously your target and stop sizes determine whether your return on risk is going to be high or low. Again, market conditions, bear in mind, are inconsistent, and the return on risk can vary. And that's why you have to have a big track record of 100 trades that you can say, oh, my return on risk over the last 100 trades has been 120% or whatever. And then your trading approach again will determine your return on risk. Some people that trade channel trading and those kind of things can get phenomenal returns on it. They can use the smallest risk and they can get the biggest targets. And there's all kinds of little techniques to do that. For instance, a lot of good traders that I know enter on the 15-minute chart, then which needs a really small stop. Then as the trade goes well, they then graduate the same trade to the 1-hour chart, and if that goes well, they graduate the same trade to the 4-hour chart. So in other words, they get into huge targets with very small stops. So you can manage the return on risk quite nicely. Then another factor that determines your success or your income from Forex is how much of your account are you prepared to risk. Now, that goes hand in hand with the amount of money you have in the first place. So if you're risking 1% of your account and you've got $1,000 account, you're only going to be risking $10 on your trade. Now, if you want to double your risk, that's $20. If you want to go to 3% of your account, that's $30. And if you're risking more and your success rate is good, that accumulates a lot faster than if you were risking 1%. So your success rate and your return on risk determines how confidently you can vary the percentage of your account to be risked. And again, market conditions, if the market conditions go bad, lower the account size percentage to be risked, and if they are good, increase the amount to be risked. And then again, your trading approach will determine your success rate, it will determine your return on risk, and therefore it will determine the percentage of your account risked. And then the number of trades. Now, just imagine this. You go to a casino and the casino says, look, you can spin a coin. And every time you spin a head, you lose $10. And every time you spin a tail, you win $20. Now, I can tell you, people will stay in that casino for days and days spinning coins because the odds are so much in their favor. So what I'm saying is that the number of trades plays a role. If you're trading well and you're trading a lot and using a lot of currencies, using lots of time frames, those kind of things, and the odds are in your favor, then you should be trading very actively. And the number of trades therefore determines the amount of money that you're going to make. And also then again, market conditions change, and when market conditions get bad, trade less, and when they're good, trade more, that kind of. So I've gone through the 5 factors in a little bit more detail, but let's have a look at them in practice. For instance, here's one analysis of the Make Money EA that was tested, and here you can see the profitability per trade is about 75%. So it's got a high success rate, and the average profit per trade is 99, and the average loss is 38. So it's got a very high return on risk. And this is over 100 trades. And that's why the equity chart is going up. So it has the best of both worlds. It's a high success rate and a high return on risk, and that's why this particular one is so good. Now down here we've got the Dream Machine, which is probably not this in the same class in terms of the average win year is $116, and the average loss is almost 4 times that. Almost 4 times that. But because it has a very high success rate of 77% and only loses 21% of the time, it is overall profitable over all the trades. So there's 2 ways of skinning a cat. Ideally, you want to be on the where your success rate is high and your return on risk is high. So those are the factors that play a role. And here we have an example of $1,000 account. The success rate is 60%, so it's above average, and the return on risk is 120%, so it's above average. So it's getting $120 for every 100 that it risks. The person here is risking 1%. It's the person's doing 20 trades a month, and then what then happens here is that each winner will give $12 profit. Each loser will lose $10 for this trader, but when he trades, the successful trades, there are 12 successful trades for the 20 that he trades, and there are 8 unsuccessful trades. So that means in total the winners will be $144, the losers will be $80, and the overall result at the end of the month after trading 20 trades will be $64. So the gain on the account is 6.4, which is a fantastic gain. If you think about putting $1,000 in a bank, you're not going to get 6.4% return on that, although there is obviously some risk involved. But that's why these factors are so important, and this is how the income calculator works. It will calculate all that information for you, and in the end you'll know that's how much I can make on my $1,000 if I have that kind of performance. So let's move on to some strategies. The first and best strategy that you can get is if you have a high success rate, like there, 70%, and you have a high return on risk, 120%. Some people have more. If you do that, if you have that combination, you are printing money, literally printing money. What you then do is you can risk a higher percentage. So in this case, we're risking 5% because we've got both of these in line, and we're trading a lot more, 40 times, trading a lot more currencies, a lot more time frames, because each winner gives us $120. Each loser gives us $100. Successful trades of the 40 will be 28, and the unsuccessful trades will be 12. Therefore, the winners will give $3,300, and the losers will give $1,200, which means that in a month I can double my account to 2,000 up there. And again, the account was increased because of the confidence level that this brings. So so you put more money in and you double your account. There's the gain is 108%. So there you are. There's a formula. There's strategy one. If you've got a high success rate and high return on risk, you can risk more transactions, and you can double your account. So the strategy for strategy one is have a high risk percentage, have a high number of trades, have a high account balance, and double your account. So that's strategy one, using this income calculator. But again, you've got to trade 100 trades to determine whether you have a 70% success rate and a 120% return on your money, on your risk, before you can employ this strategy. Now, what a lot of people do is they actually start employing the strategy right away with no track record, and what it turns out is they actually have a low success, a low that, and they blow their account very quickly. You can double your account and blow it as quickly as that. All right, then you have strategy 2 and 3, and I've grouped them together because they're basically the same thing. If you have a low success rate and a high return on risk, you can be profitable. You can also be profitable if you have a high success rate but a low return on risk. So, and here's a few examples. But when that happens, when you haven't got the alignment in place, then you need to lower your risk percentage. So you go back to 1% in each case, lower the account size, so you can see the account size is lower, and also lower the number of transactions, so you lower that. And while you're trading in this format, you need to control risk, but use that to improve your trading results at low risk, and work on both the success rate and the return on risk, so that both can become profitable, and you can start unleashing that money printing trading ability. So that's strategy 2 and 3, and that's so strategy 2 and 3 really is a strategy where you need to control risk very much, and then work on improving your trading in these two areas. So let's move on to the next one. And then there's strategy 4, where a lot of traders fall into. And the problem is they don't know that they're in strategy 4 because they have no trading record. And I'm not suggesting you create a trading record on a live account. You can trade a demo account, trade 20 trades or 30 trades or 50 trades, create that trading record, measure your success rate, measure your return on risk. And if they are not where they should be, don't trade live. You are committing financial suicide if you do, because if your success rate is low, your return on risk is low, you are going to make a loss on every transaction. And if it's in that case, what you do is you just keep on demo trading until you can get these numbers up. You use as low as possible percentage of your account. You have a low number of live transactions. When you're demo trading, you should trade with a high volume of transactions to get a bit more feedback, but lower your number of transactions, because with every transaction you're making a loss. And then lower your account balance. You can even go with $500 here, because as you can see here, because of this account incurred a almost 6% loss during the month. So these are two of the most critical success factors that you've got to get right. If you can get them right, I promise you, you start printing money. Literally, you start printing money. Okay, so let's look at the Forex income calculator in a little bit more detail. It is downloadable from the link that you'll see in the video description. Unfortunately, it's a long link, so it is difficult to make it clickable in the video itself, but certainly go to the description of the video and download it from there. And basically what it says is that if you've got a $200 account and you're assuming a success rate of that and that's how much you're going to be making after 20 trades. And you can, all of these things are totally variable, so you can use a drop down menu to determine how many transactions you're going to do, what kind of risk you're going to assume, and all of these are drop down menus, so you can actually enter whatever value you want, and obviously you enter your account size, and then you can calculate all of these values. Now, a lot of people out there think that they can use $200 and they can become very wealthy by just doing that. And quite honestly, even these are unbelievably good performance figures. You're still going to make $50 from your $200. The guys that do well are the guys that risk ridiculous amounts of their account, 20% of their account, and they therefore get a much bigger return on their money, 25%, and that's how they build. When you see these accounts being traded from let's say $1,000 to $100,000, that is many times the case that they are just risking more than is healthy. What is healthy is about 1 or 2%. 10% is like going to the casino and playing black and red all the time. It's not healthy in the long run. This will give you the ability to calculate what your income is going to be from Forex trading, and also it will give you a dose of realism, because you'll realize that you need to work very hard to get your success rate up and your return on risk up. And a return on risk is basically how big is your target compared to your stop, and your success rate is how many winners and how many losers do you have. So it's as simple as that. Your whole Forex career revolves around that. Then the startup capital is often just a number that you can either afford or that you can add to, or something like that. So that's not all that controllable. The risk percentage, again, is very easy. If you're doing well, trade with a high risk percent. If you're doing badly, trade with a low risk percent. And then your number of transactions is something that you can decide you want to do. You can either trade more rapidly or less. And also, just a reminder, this calculator applies to EA trading as well as manual trading. So you need to get your success rate from your EA trading, your risk on return on risk from your EA trading, as I've shown you previously. Those numbers are freely available, and you need to plug them in and evaluate your trading according to that. So you can use this calculator for EA and manual trading, and then it will give you all the statistics, and the most important statistic: what is your overall result going to be at the end of the month. In this particular example, you can see that the guy's doubled his account. He's gone from 200 and he's had a gain of 132% by just getting his success rate high and his return on risk high, and risking a little bit more. 2% still a healthy amount to risk, and trading a normal number of transactions. So this is how you also build your double your account strategies and all that type of thing. It's all based on success rate and return on risk. Now, I must apologize, this video has gone on a little bit longer than I intended to, but these are all such important things that the average Forex trader, firstly, doesn't measure, secondly, doesn't have a track record where it can be measured, and the traders just go and trade blindly. They don't measure the results, and therefore they cannot create a strategy for success into the future. So please, if you are interested in creating a success for the future and you are a manual trader or an EA trader, then download this free tool, create a track record of 20 to 30 trades, analyze your track record, identify the areas of improvement, see how you can increase your success rate, and see how you can increase your return on risk. And there are many ways you can, and then calculate the impact of the improvement that you're planning. So it's like budgeting in a business. So you say, these were my actual results, my budget for the next month is this, let's see how I go. Measuring your performance and planning into the future is the best motivation you can ever get for anything that you do in life. And this is what I'm suggesting for Forex trading. Thanks for watching this video. If you've liked it, please give it a like. If you haven't subscribed yet, subscribe and click the bell. But most importantly, share this video. You can do this in many ways. Message your friends, send them emails, or share it on social media, on Facebook, on Twitter, and those kind of places. So from me, Alex Aploy, cheerio.